As you just heard, a 14th rate hike from the BOE, bringing the rate to 5.25%, the highest level since 2008. Your view, was this the right call?
Well, yes, I think that going into this, less was definitely more. I think the split decision is actually very interesting. You have somebody voting for no change, which, frankly, if I was on the MPC, I would probably also be backing. But then you also have two people voting for a 50 basis point hike. What's going on here, of course, is the fact that you can pick pretty much any set of data to support any one of those three views, 0, 25 or 50, because there is a rather mixed picture coming through in the economic data at the moment about whether or not inflation is going to be a more persistent problem, whether or not the economy is slowing more significantly. So I think that picture of uncertainty is very important because, as we just heard from Governor Bailey, that's going to continue to be an evidence-based central bank. And if we've got a confusion about the picture, there could be some volatility in expectations as we go into the next meeting of the Bank of England.
Okay, so what's going to happen here? Because the MPC says rates are going to remain sufficiently restrictive for sufficiently long to return inflation to that 2% target. So what will a peak in rates look like, and how does the BOE get there? That's the question.
Well, I think we are very close to the peak of interest rates because we are going to be continuing to see inflation come down. In the UK, we have had obviously the durable goods surge in demand, producing inflation back in 2021, but that's now long gone. Durable goods prices are in an extreme disinflation environment. Energy prices in the UK have not reduced inflation as much as they have in Europe and in the States, but that's because we've got, frankly, a really weird way of pricing utilities like electricity in this country. And we absolutely know that those energy prices are going to come down. It's just lagging behind its peers. So we know inflation's coming down there. And we have had an episode of profit-led inflation. There's been margin expansion, but this is now coming under pressure. There is a slightly weird situation in the UK where supermarkets operate a two-tier pricing structure. They have two prices for a lot of products. If you have a loyalty card, you get a significant discount. If you don't have a loyalty card, you don't. So lots of people are actually benefiting from the discounts, but those discounts aren't reflected in our inflation numbers. Now, again, what that's telling us is that the inflation experience is actually already lower than the headline numbers. So I think as we go into the end of the year, the 4.9% forecast that the Bank of England has may actually be too high. We may see inflation coming in below that by the end of the year. And that means, of course, as inflation comes down, real interest rates automatically, by definition, are going up. So you're continuing to operate not just a restrictive policy, but a more restrictive policy as we see inflation continuing to come down.